Well, there's a lot of talk about Nigeria being the continent's biggest economy now that their GDP has been revised. And joining us now is David Faulkner, Sub-Saharan Africa and Southern Africa Economist at HSBC. David, as I say, you know, this huge leap, 89% from admittedly an ancient base that they were doing. Everyone's got very excited about this. How important is the size of the economy for investors?
I think it's very important. I think you're now looking at an economy that is over $500 billion US. It's, as you say, the largest economy in Africa, the 26th largest in the world, and we estimate the 11th largest emerging market in the world. And that really will bring it much more into the scope of investors. It can't be ignored anymore, given its size.
What does this mean for the new structure of the Nigerian economy? Surely there must be sectors that were previously not accounted for that are now accounted for. And what does that mean for investors who now have to figure out where to shift their money?
I think that's the other important part of this rebasing, is that it illustrates that there's been tremendous structural change in the Nigerian economy over the last 20-25 years. Whereas before, a lot of investors would have thought of just about oil and gas, you now see a much more diversified economy. The oil and gas sector is now 13-14% of GDP instead of being a third of the economy. You see services sectors rising from 29% to above 50%, and that really is a big change. You now have a non-oil economy that's accurately measured and will become much more attractive to investors.
Looking at these sectors and the things you've been talking about, are investors that ignorant? I mean, if they've been to Nigeria and they've looked at what's going on, surely there would be some of them that would say, hey, the official numbers are not telling the story, things are happening here. Do we need to be told that the economists have recalculated it to see opportunities?
I think certainly people have been seeing the advantage of Nigeria and its sectoral growth patterns. You see that with investment in the telecom sector and the retail space, even with major South African companies going in there. But I do think that when you have the scale of this rebasing, it does focus investors' attention there. I think the other important thing with this rebasing is that it makes a number of metrics that are measured against GDP much more attractive. So the public debt ratio has fallen from 19% of GDP to 11% of GDP. It brings down the budget deficit as well. And these things will also be comforting for investors because it shows that the fiscal stance is very manageable.
We also see Nigeria leapfrogging to 26th in terms of global rankings, in terms of its size. And quite interestingly, I saw a lot of Twitter conversation and Facebook conversation asking questions about the G20 and BRICS and saying now that they're bigger, should South Africa be worried that its membership into some of these groupings will be questioned because there's an economy that's bigger than South Africa's?
Well, I think that may well be considered, but I think the focus point should be that the African economy benefits from having two powerhouses now. You have South Africa also in the top 30 largest economies in the world. You have Nigeria now ranked 26th, and that really is good for the region because it gives you two large domestic economic drivers in different parts of the continent, which will help both regions around it, but also there are obviously significant synergies there.
But there's another question I don't think has been asked or asked enough, is that why did it take so long for them to rebase it? I mean, it seems an obvious thing to have done. But that also raises questions about other countries in Africa. I mean, what is your sense of how many of them we're getting accurate numbers from? If Nigeria was so much out, what are all the others doing?
Well, we've seen a pattern in a number of African countries where significant rebasing exercises have taken place. For example, in 2010 we had the Ghanaian rebasing that shifted its base year from 1993 to 2006, and we saw a 60% increase in measured GDP. We've seen that repeated across a number of African countries. It takes time because there is limited capacity from a statistical perspective to undertake these detailed rebasing exercises. It's good, though, that we're seeing it happen more and more often because it gives us a better idea and picture about the real economic activity on the continent.
David, you spoke about the positive metrics that are likely to be impacted, in particular the debt to GDP ratio. But what about the weaknesses that are now brought to the fore? Infrastructure for one, the tax base for another. What does this tell us about the kind of challenge that the current administration has to take on?
So I do think it sharpens into focus some of the challenges. So poverty levels are still very, very high, obviously. Unemployment levels are incredibly high, particularly among the youth. You have these massive infrastructure deficits that the government's starting to try and unwind with some of its policies, but there's significant work to be done. If you look at the World Economic Forum's global competitiveness rankings, Nigeria's infrastructure ranking is among probably the bottom 30 in the world. So these things need to be overcome, and they're significant challenges. However, on the other hand, you could look at these things and say, Nigeria has grown so much and performed so well despite its structural challenges. What we think as HSBC going forward is that we'll need to focus much more on fiscal and structural reforms to maintain potential growth rates that are around 7%. Another interesting thing is if you look at these ratios, is things like education spend as a percentage of GDP. It's below 1%. In South Africa, it's about 5.5% of GDP. And really, when you look at education and human capital as key drivers for productivity growth and for long-term growth, that too is where there will need to be much more attention spent by the government. However, if it can achieve those things, you can see the economy growing faster and faster and faster going forward.
South Africa versus Nigeria, we've been joking about it, you know, and on the sports field we joke about these things, although we take them seriously too. So looking at the two now, how would you weigh them up? Because GDP is one thing, but there are lots of other factors like infrastructure. Are we seen as now less investor friendly than Nigeria?
Well, I don't think it will be a Nigeria versus South Africa call. I think the two countries have a number of advantages to them. South Africa has adopted a much more infrastructure-driven approach over recent years, and that will yield benefits going forward. Nigeria still has a lot of work to do on that, but it too, with its economic size, will be very attractive. What I think is key at the moment is that you are seeing divergent growth trends. So we are seeing very sluggish growth in South Africa versus much more rapid and sustained growth in Nigeria. Nigeria's average growth of almost 7% since 2000. We see South Africa slowing down in 2014. HSBC's own forecast is for a growth rate of 1.8% for this year.
David, very quickly, you spoke about those new sectors. As HSBC, which are the ones that you've pinpointed as possibly the fastest growing sectors that we're likely to see in Nigeria in the coming short term?
Well, I think certainly, given the fact that we see this demographic dividend, a young and growing population, growing consumption, I think certainly there's big benefits in the consumer sectors and the services sectors. And I think what we've seen over the last 10, 15 years is this growth of the service industry in Nigeria, and that's likely to continue.